What's going on, guys? Had a long vacation this week, so I was out making video. I was not making videos for the past weekend, just away basically again. So want to make my daily videos this week, starting now. So before I get into it, make sure you like, subscribe, comment below. Every week, if you haven't watched previous videos, I like basically making a recap on stocks I'm watching. So this week's is obviously a short week because the market's open Tuesday to Friday. So stocks to watch this week. These are going to be the four I'm targeting this week, and I'll let you know my thoughts, where my price points are, on where I want to buy or what I'm interested in, and just basically overall what's going on in the market, where I think it's going. So first one is Beyond Meat. Ticker is BYND. BYND, that's the ticker for Beyond Meat. It opened last Monday at 115. My cost base is around 150. I think it was around 120. And the weeks prior, it was floating around $100 and $105. So it was really beat down a couple weeks ago. And then, just some, crazy news. And next thing you know, the stock's back up to 145 again. So it's literally insane how fast things can turn in the market, especially when people feel, I think what happened was a lot of the tech and growth stocks people ran out of due to the Fed saying they might increase rates a little quicker than what they thought, and just some other news that recently came up, and now they don't think it's going to be as bad, but they're not sure. So the market really rallied back. Obviously things are opening up more. So I think there's more good news than bad going on. I think, a lot of things are happening. I'll explain at the end to my thoughts on where I think the market's going. But anyways, crazy run this week, 145. When I started making this, basically my views on Beyond Meat, I really liked it under 140. So now that it's above 140, I'm not really interested in averaging cost up at this point. If it does go down to the 115 or $100 range, I would love to maybe average cost down. But very happy with my position. It's basically fully built out. That's why I wasn't doing it. But that's definitely a stock to watch this week to see what this does. Coinbase, ticker is COIN. So this company IPO'd about a month ago. It is really beat down right now, obviously with the Elon Musk tweet saying how Bitcoin and a lot of cryptos are being mined with dirty coal, like in China and Russia and stuff like that, and he doesn't support it because it's not good for the environment basically. So he's out temporarily, and they need to find a cleaner solution. So I think all that news just really hurt the crypto market because for whatever reason, whatever Elon Musk says in the crypto market in general, especially Bitcoin, he can literally control that stock. So that's one reason why I don't currently own any Bitcoin, is because I don't like that one single person can make a tweet and manipulate the price of the stock. Or the coin. I just don't like that. So I do own Coinbase. My cost base is 330 or 320-ish. So I have been averaging cost down slowly. Obviously I'm down a lot. However, the fundamentals of why I believe in Coinbase haven't changed. I believe in crypto long term. So I'm along for the ride. I'm willing to hold it for many years. And I do think eventually it will be a 4-figure per share stock if there's no share splits. But 230 is very tempting. I do want to see what the market is because it's a very long-term position for me. So it's something I don't need to run and hurry up and build out. So if it does go below 225, I probably will average cost down. If it goes under 200, I'll average cost down even more. So it's kind of where I'm at with Coinbase. I really do think the crypto market, some of the coins fell 30 to 50% in the past month. So I do think, if the coins are around that, it's going to hover around this share price. However, if there's trading going on, being a broker, which is what Coinbase is, it's really not a bad thing. As long as there's transactions going in and out of crypto and it's still a commonly talked relevant thing growing. It doesn't matter if the coins go up or down, as long as there's trading volume. That's really what Coinbase is. So that's why I like Coinbase too. So super profitable, tons of money on the balance sheet. If they execute properly and crypto is a thing in the future, a bigger thing in the future, it's going to be an awesome stock to be a part of. So I just wanted to, basically get in when it IPO'd and just go from there. CSSR, that's Corsair Gaming. This is one I've been building out and talking about for a couple, maybe like 6 months now, maybe a little longer. It is below my cost base. My cost base is $34. It's at 31 right now. If this stock gets anywhere in the 30s, like $30.99, let's just call it, or 29 or 28, I will be averaging cost down on this. I'm 85% built out. I do want to fully build this one out probably this month because I do think next earnings, Wall Street's going to wake up and be like, wow, people still play video games even though the pandemic's over and all that stuff. So definitely want to fully build this one out. If it happens to run up and go back to $35, $36, $37 or $40, which it has been a couple months ago, I'm totally fine with my position. So that's kind of my plan of, my course of attack with that one. Last stock I'm looking at this week is PLNHF, which is the ticker for Planet 13. The share price is at $6.62. I've been buying this stock ever since it was like $1.20, $1.50, $1.80. Bought it again at $3, bought it again at $5. If this stock goes under $6.50, I will probably average cost up again. Their new Orange County store is opening up in about a month. So I definitely want to, if you think they're going to have more sales and this Orange County place is going to be successful, you probably should be buying right now. So I think once it opens up, I don't see the stock going below $7 again. So I definitely want to make this position bigger. So that's probably what I'll do if it goes under 650. Let me see where I'm at here. So thoughts on the market this week. So we had a crazy run last week. I just think, there was a lot of good news with the vaccine and people, basically the whole country and some parts of the world opening up. So I think that's getting people a lot excited for spending. Things are returning back to normal. There's pent-up demand to travel. Really everything's getting more back to normal. So I feel like the market is pricing in all that normalcy. And you hear a lot of big analysts say, maybe inflation isn't as bad as you think it's going to be. I see both sides of the inflation thing. It really depends on how the Fed handles it. If they can slow down the bullish rush and inflation if they raise interest rates. I think they will do that. They were saying obviously 2023, they were going to start to do that or look at it. I do still think it's going to come a lot quicker. However, I do think, the government and, all the feds are they're going to look at how the summer goes, and they just want to get a bigger picture of how many people are spending, how many people are coming out. I think it's all relevant to how fast things get back to normal. The quicker things get back to normal, I think they're going to start slowly raising interest rates again, which in theory hurts the market. So you just have to be mindful of that. So my plan of attack for this summer, really the next couple months, is I'm going to put in, my normal amount every month I put into the market, and I might put 20% of what I put in every month, just add cash, like hold some. Because I do think the higher this market runs, the lick of any bad news, just say, what happened last year flares up and we have to go back on lockdown, or we have to roll back, limits to where people can go, or traveling, or whatever. Any lick of bad news, which could very well happen in the fall, or they say, hey, we're raising interest rates quicker than what we thought, we're doing this now. I know the market's going to be emotional, have a pullback, and I definitely want to take advantage of some of my positions. I hold, I'm a long-term investor, so I want to take advantage of that stuff. So I would like to have 30% cash again by the end of August. However, I kind of roll with what the market's doing. Obviously last week it was green. I really didn't buy anything because I was actively buying the past 4 to 6 weeks prior to that. I feel like I was making a video like every other day saying, I bought this, I bought that, I bought this. And next thing you know, your positions are way bigger than what they were, prior to that. So I'm kind of happy with where most of my positions are. And if the market keeps going green, I'm just going to let it ride. So obviously the higher it goes up, if more bad news, the quicker it's going to correct. I do think it's going to leg down in the next 2 weeks. I don't know why I feel that way, especially with this big 4 or 5 day green rush we just had. So we'll see. But that's really my approach. I'm gonna stay cash heavy. I just want to always be in a position of power. So if you have cash, you are. And these are the 4 stocks I'm looking at this week. And if I buy any, I will let you know the percentage of my portfolio of what I bought in that stock and at what price. So that's all I got. If you guys like this video, or you just like hearing my stocks I'm looking at every week before the market opens, make sure you like, subscribe, comment below. And that's all I got till tomorrow. Peace.